Okay, so welcome to today's seminar. We're going to talk about that forex and futures, all right? And just a very simple introduction for myself. I think you guys should know me lah, because yeah, my students, right? Okay, there's a website called TradingView, and right now I'm the top authors. Number 2 TNT Sunrise is me. So this session is mainly for my students in Singapore. Okay, for them to come to. We have a gathering, and also to we discuss some kind of problems you have in your recent trading activities, right? And I believe that we do catch a lot of profitable trade recently, right? The Euro short, the gold short, Aussie short, the Kiwi short, basically short everything. We're allowing the dollar, right? Yeah. Anyone still holding the dollar yen's position? Okay, let's start from the DXY first. Okay, so whenever we look at any forex or future markets, the very important thing is that we always go from the DXY. Right? Because the dollar index is really important because all the currencies and all the commodities are based on the USD. So if the USD is in a one-way market, which means the market like the commodity will keep dropping, will keep going, making lower, and the dollar is getting strength. And the reason for its strength is because of the hike rate. Okay, the Fed finally increased 0.25 basis points, right? And from the statement that tells in 2017, they're going to increase like 3 times or 4 times, 2018, another 3 times. So it's like they are keep going to increase the rate in the next 2 or 3 years. All right. So this actually tells us the dollar. There's a reason for it to become so strong. Okay, and let's look at the monthly chart first. Okay, this is a 2001. Okay, the DXY at the 120 level, and after that, I think that time belongs to the tech bubble, and the first time the dollar have a very, very bearish trend, and then in 2007, 2008 here is the part that the financial crisis, Lehman Brothers, the subprimes, right? So it happens, and then the dollar is actually making a bottom between 2008 to 2011. Okay, why dollar actually becomes we say a bottom at this period? From the fundamental side, it's actually those funds that are previously invested from the US to those emerging markets are going back. Okay, the funds are flowing back to the US, right? And then the dollar sideways for a while, for like a couple of for 3 years, and finally in 2014. Okay, there are 2 things they do. Okay, because the QE1, QE2, that is the easing part, and in 2014. They first starting the tapering. Tapering is actually something that they want to stop to going to release more fund to the markets. And then after the tapering, the first signal that the dollar is going to hike rate happens. And the expectation from the dollar to increase rate runs almost half year, okay, 6 months. And we can see that from this tells us a very good reason is from the 2014 May and 2015 March. All these months, okay, the Fed didn't actually increase any rates, but the market has expectation, okay. So and just purely based on this expectation, the dollar is going to see very strong bullish move, and at the same time, the euro dollar, okay, the Rocky, all right, the European sessions, they are actually doing the QE, so it's actually a very, very strong contrast between the euro and also the yen, the Japanese government, right? The Bank of Japan and Bank of the euro. And because these 2 parties are easing money, however, the US is telling people that I'm going to increase, I'm tightening. So this will actually have a lot of impact on the treasury yield, the US T bond, okay, 10 years bond or 30 years bond. And the bond yield is very a main factor that drive the money. Okay, for example, if you are if you're in Japan, it's very easy for you to borrow some money from the bank because the interest rate is very low. You don't need to pay a lot of interest. So very easy, you can actually borrow the money from Japan, and then immediately you can just to buy the US dollar, US denominated assets like the US stocks or the US bonds. Bonds is safest, okay, because bonds value will actually maintain the same or not be so volatile. However, just people just look at the yield difference because Japan, the yen has negative interest rate, right? And the dollar have much higher interest rate. So if I borrow the yen and I buy the bond, I just hold for one night, I can earn the interest difference. And this is the so-called carry trade. And that's why it's driven to the dollar to a very, very high place. Because a lot of people see the potential gains from the interest side. Okay, and right now until today, we can see the bonds, the US, all the US bonds, the yield is going up dramatically because the basis rate is going to increase. So that's why the 10 years treasury bond or the T-notes, the yield will also increase. Because the basis interest rate is we call risk-free, investment returns. Okay, so and that happens, and especially you can see that just on the day the FOMC meeting, right? The dollar really goes to the high. Okay, and we can also compare a lot of things. Let's compare the ZN. Okay, firstly, I'm going to talk about some fundamentals and what's happening now, right? ZN is US Treasury bond T-notes, okay? So if you don't know what is ZN, you can just always come here and click here. You can see the, let me just do it again. Okay, TradingView has a very good function that we can we can make some studies by ourselves, okay? And I'm going to compare 4 things in this chart. The firstly is DXY, secondly is the ZN, okay, ZN, okay, 10-year T-notes future, okay, 10-year T-notes future, Treasury future, and then we compare the euro dollar and the dollar yen. Okay, and the S&P. Okay, five things. Okay, what can we learn from the charts? We can see very clearly the dollar going up immediately. What's the most 2 important factors for the dollar? The composites for the DXY. Euro is almost 50%, yen about 25% to 30%. The rest is like sterling, Canadian, or the Sweden, other currencies. Hi, you are? Oh, okay, thanks for coming. Okay, so this tells us when the DX goes up, we need to find out, is the euro going down or the yen going down? And it's very clearly, we can see the dollar yen, okay, rise a lot, right? From 100 to 118, just within 1 month. Okay, 4 weeks or 7 weeks, okay? And the euro drops from here all the way, goes down. So actually, these are telling us why the DXY is so strong, because the euro is depreciating, the yen is depreciating, okay? And what happened to the bond? The bond goes down, right? So once the bonds goes down, we know that the yield goes up. Okay, because the calculation from the one side is very simple. Okay, because for every bond, you have this is a face value. Is how much money you invest, and you have the coupon rate. Okay, the coupon rate is like you lend me the money, I pay you as interest. Okay, the coupon rate the value for the coupon is the same. They maintain the same. So this one fixed. And if the bond price goes down, this one goes down. The actual yield will goes up. Okay, so the actual yield and also the bond price, the yield and the price is always negatively correlated. Okay, so we can say that the ZN keeps going down, which actually tells you that now if you buy the USD bond, you have a higher yield because the bond's price cheaper, right? You invest the same amount of money, you get a better return. Okay, so this actually all tells us DXY, the dollar is really going strong, and the US dollar, the yield is very attractive. That's why the euro cannot. Nobody wants to buy the euro. Nobody wants to buy the yen. Nobody wants to buy the Aussie, because US dollar is still the #1 currency in the world. And for such a very safe currency, safe asset, the US bond, right, will actually attract the money flows to come back to the US side to buy the US assets. Okay, so and just 2 days ago, when the FOMC finally increased the rate, it's actually confirmed from the fundamentals. Okay, this scenario will keeps moving for another maybe 2 or 3 years, as long as the Fed is still going to increase the rate step by step. Okay, so that is what we call the major trend. The major trend is driven by the major fundamental, forces. And the fundamental forces, when we talk about the world economy, right? We need to know that, because now we are still not so-called one nation, one country. We have so many countries, right? So different countries, they have different motivations. They want to control their money policies so that to do not, for those kind of export-related countries, they don't want their currency to be so strong. Okay, that's a common sense, because if I want to my goods to be exported to other countries, if my currency is very strong, which means my goods are expensive, so which is less competitive than the other goods. Okay, that's why you can see that another very interesting thing is let me just close it down. It's a USD CNH, okay, the China. Look at the monthly chart. China yen, renminbi, okay. You can see here very long time ago, the renminbi versus dollar is like 1:9 or 1:8. All right, at that stage, is China the expansion is the faster stage, because China, they manufacture a lot of goods, okay, selling to the overseas, earn the US dollar, and that's why when the China want to join the WTO, the US government keep pressing the China side to say your currency is too undervalued. You must let the renminbi to appreciate. Why? Because they don't want the China goods to be so very, very popular or very, very cheap. Otherwise, the US manufacturers will hurt. Okay, and then the renminbi actually they drop. Okay, USD CNY drop means renminbi goes up, right? Because dollar goes down. So renminbi from 8 all the way go to 6, and that is actually from the political side. Okay, it's two countries negotiation. You want to join WTO? Yeah, I want. So no, okay, don't let your renminbi to be so cheap. Appreciate it. Okay. Otherwise, I don't want you to. I won't allow you to join WTO. Okay, because your goods are too competitive, right? And then it totally flips up. See here, big reversal, right? And this is due to the China economy, also the renminbi, because China has also printing a lot of money in the recent 10 years. Okay, so we have very common sense. If a country, their money is double, of course the value should be dropped, right? And now the US dollar goes up, and what will the China government do? Will the China government buy more dollar or sell more dollar? Sell more dollar? No, they want to buy the dollar because dollar is going up. If the China government sell dollar, they are hurt. Yeah, sell high, of course, but the China government, they are buying more dollar. Okay, they don't want the renminbi to be so expensive, right? Because if renminbi is still maintained very expensive, that is hurt for China's export. And we can see that, yeah, now the USDC, because China now have a very, very good reason that to let renminbi to depreciate again, because USD is going up, USD is hiking the rate, right? All the other currencies versus US dollar is getting weak. Why should I become so strong? We just look at a Sing dollar. Okay, USD Sing dollar. Okay, we know that Singapore is quite a financially stable country, right? Singapore dollar is actually aimed for a basket of currencies, right? So among the currency itself, like Sing dollar to Thai baht, Sing dollar to rupiah, Sing dollar to Taiwan dollar, Sing dollar to CNY, is actually Sing dollar didn't actually fluctuate a lot, but Sing dollar moved as a dollar. That's why, because when Sing dollar is too strong, it's also bad for the Singapore economy, right? Because people come to Singapore for touring, they feel, oh, Sing dollar is too expensive, I don't want to come to Singapore, right? So that's so from this chart, we know that the DXY may still going higher, okay? And you can see here from this USD Sing dollar, it actually breaks the 1.44. Okay, the price, we can see from the chart, it already breaks the high. So once this place is violated, the next move for the USD may all the way goes to like 1.52 or 1.55. That is the target for the USD to go up. So by looking at these different charts, we know that there are still a lot of spaces for the USD to move up. But that's why now under this scenario, the only direction we want to see is we want to long the dollar. We want to we want to hold the USD asset. Okay. This friend is coming from UK, right? From London. Okay. So can I just ask, your deposits is mainly in sterling, right? So do you feel hurt that sterling goes down, USD goes up? Do you want to spend more money? And if now I give you a chance, maybe just before the pre-exit, you have a choice to convert all your sterling to US dollar. You will be happier. You will, right? Yeah. You see, all the other countries, because that's why we need to learn the markets, because yeah, the GBP. Now, GBP, okay, look at the sterling. Sterling used to be the most expensive currency in the world, right? Used to be 2 to 1. Means 1 sterling versus is equals to 2 US dollar, but now it's 1.24. 1.24. That's crazy. It's like if I holding sterling, I dropped, almost 50%, like 40%. I cannot. If I people who earn sterling access, now they are in a very, very bad stage. They have less buying power to buy the USD asset. All right. Okay, so that's something from the dollar. Okay, we know that. So where is the dollar likely go to? Okay, from the technical side, we know that it has just broken the 618, right? And previously, the dollar is still having some resistance at the 618, and now it just finally breaks up. So once this level is breaks up, the next structure I'm looking at is here. Okay, the dollar may have some resistance at 106 to 107. This level, we will have some kind of resistance, because look left, there are some structure here. Structure just basically tells you that previously where does this currency or this commodity stays in. So when it stays in, which means that there are some people who buy or sell, and one side is wrong, right? For example, here, did we see some buying forces here? Yes, we do, right? We have the price dropped to 103 and rally back to 109. Some buyers are buying at here, right? And after that, it just drops. So what is the impact for those buyers? They are hurt. They are losing money, right? And in the currency side, a lot of people, they don't use leverage. They are just And currency is something that is actually a connection between different countries. So a lot of companies, a lot of institutions, they do have some USD and convert at other currencies at the time. Okay, so these people are trapped, right? Trapped so many years, and guess what? If the dollar right now finally goes back to 106, those people who are trapped, they want to make the break even. All right, because I do see that, because I have some clients, Linus know that I have the Suari, right? This client, she has some crazy positions. When the dollar is at this low, he sell the dollar, and he still keep there. He still keep a lot of euro at the time, and he even have some, when dollar is here, he buy the dollar. He still have some dollar that is he bought in very expensive places, levels. And now the dollar comes back to this zone, it actually have some resistance. We can expect that, right? But we don't want to short. Trust me, you don't want to short the market when the USD is very strong. It's from the fundamental side, from the technical side, it is very uptrend, very obvious uptrend. So that's why we say don't against the trend until you know that the trend is going to reverse. So we do the expectation, okay, we do the anticipatory trend analysis. So here, what I expect the dollar to continue to rally until maybe 110. That's the first place. The 786 level, that is the first place. And it may still goes all the way up to 115.28, maybe in the next 1 or 2 years. So if you still have some dollar assets, hold it. If you previously convert your Sing dollar to dollar, good, hold it, okay, because it will still goes up. Okay, then let's look at the euro dollar. Okay. The euro USD from the monthly chart. Actually, I already told you guys a lot of times that this time the 1.0470 to 1.05, this level is not going to work. Why? Because firstly, fundamental tells us the USD right increase the rate. Secondly, this place has been a support for 1, 2, 3, 4 times already. This is a monthly chart. So from 2015 until now, the euro is always above 1.05. And a lot of people are using this as a support. Okay, but what they don't know is there are some orders here. Okay, when we see here why the price goes up, it's because there are some buying forces at this stage. So just imagine if I say initially there was this thick of the buying orders. Okay, they completed the takeaway. Touch again, take another time, another portion. And now this time, because the price really pierces it. Pierce means all the buying orders are gone, zero. Okay, so that's why sometimes we see the technical or the conventional technical analysis, like the support and resistance, a lot of times it will be a trap. Okay, because institutional orders will become lesser and lesser when it comes touched 1, 2, 3 times. Okay, so a lot of things that you can see here, bounce back, looks like it has good support, but now it actually dropped, right? And so this is a valid breakout. This is a valid breakout. Let's look at the daily chart. Okay, so yesterday, right? We can see that this yellow box, this yellow zone was pierced. And we know that this time the support is not going to work. So we don't want you to buy the euro. We want to sell the euro, right? And where do we sell? Do you remember? Last time we sell is here, right? 1.0850. This is a place that, okay, you see, when the price goes down, you don't chase the price. You don't, because we want to sell the low or sell the high. We don't want to sell the low. And we wait for 1 day, 2 day, 3, 4, 5, 6, 7, 8. Okay, almost, you see, from the 11.11 to 12.08, almost 1 month. We wait for 1 month for the price to come back to our ideal entry level. Right? And some of you guys says, I missed that trade. You closed your trade too early, right? Okay. You say you're buying. You previous you are buying, right? Okay, but you don't take all the profit. Yeah, you should take all and you should short. Yeah, you should take all and short because that's the main structure that we are going to use to short the euro. And imagine you still keep the short here, 1.0850. Now it's 1.04. You earn 450 pips.
But you are short. When you are short on the top,
yep.
When you are short over there, when it come down,
yep.
There's a long start going up.
No, we short here. We short here. Not here. No, it's because okay. The key idea is we see the price breaks this structure, so we wait for the price to come back to the structure. We short here. Okay, because why? We wait for 1 month to let the order to be filled, right? We are waiting patiently. We don't chase. You see here, we don't chase. No. Yeah, in a smaller time frame there is. Okay, I'm talking about the daily chart. So whenever you see a breakout, okay, don't immediately follow, because there are so many traps. We call bull trap or bear trap. Okay, novice trader want to buy the breakout because they feel, yeah, I can make some quick money because it's a breakout. It will take me to the other side. However, a lot of times, if you chase the price, for example, for those people, who are these people are selling here? Who are these two bearish candles? Still are people selling at the level, right? But when they sell at the low, and then immediately it goes up, and the sellers becomes, trapped, right? But we don't want to sell low, because if you sell low, your entry level is bad, your risk is more, and you will be emotionally hurt when you see a very huge paper losses, right? You're struggling there. Should I close? Should I just wait for some more time, right? So, and we short here, and you can take some more profit here. That's correct, because we don't know that. You see here, this candle. Okay, we short. Yeah, we are in very nice profit, but when it's getting closer to the previous structure, the support structure, we want to take some profit, right? And after you take some profit, you become a risk-free trade. And then that's why how you can, you just need to move your stop loss. Okay, previously, maybe our stop loss is above here, 1.0923, above this candle, all right? And when the price goes down to here, I take some profit and just move my stop loss to break even. Or you can move more, you can move to here, right? Then you can just enjoy the next move. Okay, why you can hold, why you are not scared of this kind of rally? Because I have already taken profit, right? This trade has already been profitable trade, right? For example, I take a short at 1.0850, right? I take half profit here, which is 1.0530. That is 320 pips. And you close half. How much you earn? You have one lot, right? One lot. You earn 320 pips. You take half. So if you take all, you earn 302. You take half, you earn 1,006. So, but once you take profit, this 1,006 is your money. It's your real profit. It's never become a paper profit. Okay? And then you still have another 0.5 lots earning 1,006 at a time, but you have a so-called agreement with the market. So I can let you to let this 1,006 become zero. The maximum is become zero. But the other side is either you give me zero or you give me unlimited. right? And this is a risk-free trade. And until now, you earn another, you see now it's like 400 pips, right? 400 pips. And this 0.5 lots, 400 pips gives you another 2,000 if you close it now. But I won't suggest you to close it now. Why? Because it just breaks new low. Breaks new low, which means in the trend market, right? So that's the key thing that I teach in my course so that you can know that how to identify what is the current trend and what is next going to happen likely. So you can always be prepared for the markets. Okay, Euro have the goes up, comes back. Okay, this is the 1.05, right? And now it actually breaks below, which tells you that all the people who bought Euro above 1.05, they are trapped, they are hurt. And the more the market goes further, these people will become, they will cut loss. They will become sellers. They know they are wrong, right? And we want to focus on the pullback and short it again. Because we know that all those people who buy will help us to short the market. And where will the Euro go? Look at the weekly chart. The first level, monthly chart. Okay. You see here, this is obviously a break. It's broken, right? It will just keep moving lower until it reached here, 0.9907, 0.9991, close to parity, 1. So Euro is likely going to fair value 1 to 1. 1 euro equals to $1. Okay, that is the target. Until then, you don't want to buy the euro. Okay, because 1.0 is of course a very important psychology level, right? So people say, yeah, 1 euro versus $1. There are always people say, yeah, now euro is cheap. 1 euro is $1. Last time is $1 can only exchange to 0.8 euro. I want to buy euro. There are people who will consider this. So I will foresee the euro to further goes down. Okay, so now we have this in big picture, right? We know that the euro is likely to go to 1. My question is, then how do we benefit from this view? Okay, so here is something that I want you guys to focus on, because you will actually, you may encounter a lot of times that you will hear from those authorities, from those bankers, from those investment analysis, right? Tells you, yeah, the gold may go to 1,004. The Goldman Sachs says gold will go to 1,000. The oil will go to 26 or go to 22, right? You hear a lot of voices. Okay, so a lot of views. It's okay that we can make our own view, or we can listen to other people's view. And the question is how to convert the views into trades. A lot of people, they are missing, they are getting trapped in this part. They always ask themselves a question, where will the euro goes to? Where will the gold goes to? Okay, is euro bullish now or bearish now? But after they have listen to all the views, okay, they cannot get through this stage. They cannot convert the view into a good trade. But we traders, we want to focus on this part. I don't care what kind of views. I need to know that what kind of trade will help me to be profitable. Okay, let me just do a very simple illustration. Sir, do you think, okay, maybe I will ask you a question. In what kind of circumstance do you think that the Sing dollar, USD Sing dollar will go to 1.5? Yeah, goes to 1.5 previous, the almost 10 years high. MAS, right? Okay. Allow the, yeah. So that's why, okay? The central bank policies, right? And also US dollar will increase rate. Yeah, and that's why, okay, we know that there may be a reason for the USD Sing dollar to go to 1.5, right? And my question is the reason valuable or not? Is the reason will give you money or give you profit or not? You know the fact, okay, that the MAS is going to do something about the Sing dollar. The Fed is going to increase rate in the near futures, right? But you know the fact, you know all the news. However, this news will never give you a single cent if you never trade, right? So this part is something you need to focus on. And sometimes when we use our strategies from the charts, right? For example, now we know that, yeah, the euro is likely to go to 0.99. My first impression is, how should I trade it, right? My view is not important. You can say, you can say, I don't think so. I think euro is going to, I think euro is going to 0.85. Can, no problem. You can also say, yeah, I don't think so. I think euro is going back to 1.20. 120. We can have all different kind of view, and we don't know that whether who is right or who is wrong. And even who I'm right or you are wrong doesn't matter, because you are trading your own account. I'm trading my account, right? If I win, I earn money. You lose money, but your losses may not be my win. I don't have any connection with you guys, right? So don't argue with some other people if they have different opinions or different views. We can accept all kinds of views, but what really matters is, if you have this kind of view, how do you trade? How do you convert into a logical trade that can give you money? Every time you need to think about this. Okay, so some people, I have received so many questions. As, sir, can you give me the view of gold? I say, yeah, look at the chart. The gold may go to there. And he says, no, it's very bullish, the gold. I still remember when the pre-exit happens, the gold goes to, goes to 1,300, right? Goes to here. At the time, there are people say, how can you short the gold? There's no, I can still show you the message. It's so very interesting. Looking at this, the conversation between that trader between me. Okay, when I publish this is my view, right? I say, don't chase the price at 1,306, because it's very dangerous for you to buy at the end of one trend. The trend is already so obvious. So when the thing becomes so obvious, it actually tells you that this trend is going to end, terminated, right? So by just using the cipher patterns, I know that I don't want to buy the gold at 1,366. I want to buy only here, right? 1116. That's my view. And look at this guy. What did they say? Global fundamentals don't support a move going that low. Leave me alone. I don't know what is IMO. What does this mean? This is my email opinion. All right, never mind. I thought so here, he says global fundamentals don't support. He believes that global fundamentals don't support. And my answer is, I also don't know what kind of fundamental will drive the gold to this low. I don't know. Nobody knows, because that is in the future. At that stage, when price is here, who will know that the Trump is going to win? Who will know that the Fed is going to hike rate in December? Nobody knows, right? So the market actually has their own language, because what we see is past, the completed orders, those happened events, okay? And you base on current events or that stage, you base on that news on that month, right? You're trying to predict a future move. That's impossible. Okay, we always hear this kind of sayings when you go to buy any fund. Do you have any unit trust buying experience, investment, right? When you see the fund specters or your RM should tells you that the historical performance doesn't indicate future performance. Historically, this fund is doing well every year, 8% returns. Doesn't mean that you buy, you will earn 8% this year, right? So historical really cannot predict future. And these people say that global fundamentals doesn't support the move to that low. And now I want to ask him. Now, yes, now you see the global fundamentals. You know that the reason for the gold finally to come down to this low, right? The gold really does. And now when the gold drops here, it drops to here. It really drops, right? And until now, this person finally knows what kind of reason drives the gold to that low. My question is, how can he earn the money? Did he earn any profit from the view or not? No. Yeah, maybe no. He want to buy. He said $1, and there are some other people say here also. Here. See, in fact, gold will not be revisiting 1,002 anytime soon. He said it's not going to revisiting 1,002. They don't believe that, right? And at the time, because the gold is so strong, so bullish, just like the dollar, right? Very, very bullish move, keeps going high, right? And makes people that, oh, the gold is finally going to, 1,005 or 1,008. Some people believe that. And a lot of, banks, a lot of institutions are selling this, are telling this kind of information to the customers to buy gold. And once the customer bought the gold drops. People are trapped. Imagine you bought a gold one lot at 1,003. How much losses you have? 2,000 pips. One lot is 100 ounce. $100 times $200. That is 20,000 losses just in one lot trade. And if these people never cut loss, have no ideas what is stop loss, its account is blow up, right? It's wiped out. Okay? So the important thing is we need to focus on how do we trade, how do we convert our views into a trade, right? If we know that the dollar is going to increase the rate, what do? Look here. When DXY is at this place, I remember we buy the DXY at here. Okay, we have expectation that the dollar may go strong at the end of the year. At that time, the dollar is at 94.54. It forms this kind of a Libra pattern, right? And we know that 94 is a very important structure to support the dollar. At the time, it's only August, right? So at August, the Yellen still says that we may still have an increased rate, right? We know that dollar is going to increase rate. So we want to buy the dollar for a future gain. And we don't buy it at 96 at this high. We wait for the price to be, wait for the price to be all the way comes back to here, make a V shape and retest, and we want to buy at 94. We bought at 94, we convert the view that the dollar is going to be strong. We convert this view into an applicable trade. We buy at low, and what happens next is it just goes up. That is just within like 1 day in the profit. And my second target is hit in the next 2 days. So from 94 to 96, okay, this is 100 pips move, right? No, sorry, it's from 94.50 to 95, 96, 150 pips earnings. So you can take some profit and hold it. Move the stop loss to break even and just hold it, right? So we keep holding, or you keep holding, or maybe you can add some other positions. Comes back, that doesn't matter, because we already take some profit. We take some partial profit, and then it just goes up. Just wait patiently, wait for the trade to be work for you, give you more profit. It's still sideways, because this trade is 4 months ago, and it is a 4-hour chart. So okay, really doing nothing. It's still sideways, but then okay, breaks up. And this part, 96.42, is another time for you to buy, right? Guys, do you see it here? You going back to that stage. When you see a structure that is violated, and the best part we do is we want to buy it. We want to buy it, sorry. Here, this part, right? That is a perfect retest for this previous structure. So here we have another time to buy the dollar again. And again, we buy the low. We don't chase the price at this high, okay? And then move to 98, still hold, uptrend, okay? And see here, you see, what we do is, we want to catch the whole trend before the trend really starts. We goes into the trend in a very early stage, right? And majority of the investors only join the trend when the trend becomes more and more obvious, and they buy at a much, much higher pace than us do, okay? So professional traders always buy low. We buy before the market really moves. Before the move, we bought already, right? We don't want to wait for the Fed finally increase like 2 days ago, then we start to buy the dollar. That's not going to work. Because sometimes when you buy it, it just immediately comes down. Because we know that there's something, buy the expectation, sell the fact, right? When the fact finally comes in, we see that sometimes when you trade stocks, this Apple have iPhone 7, right? Just look at the Apple. Apple have iPhone 7, right? Released. And before the first month, the data of the sales, people think it should be good. It should be good, right? And Apple's price keeps going up. But after the data comes back, yes, iPhone did have a very big sales in the world and it's still a good result, but then the price just dropped. Okay, so don't be so late. Don't be too late when the price already moves so high. Okay, just imagine here. So we bought at 94.50, and now it's 103. Right, just keeps going up. You just enjoy the trend. Now the trend is your friend. Right, trend is your friend when you are in the early stage, because the trend will just keeps going up in your favor, give you more and more profit. The trend is not going to be your friend when it comes at a very late stage. See here, 100, 101.71. 100 again. Okay, comes to finally breaks up. So the whole move for the dollar, right? What we do is we catch it in a very, very low stage, and that's how we trade. You don't want to spend so many times to guess the market is up or down. You just want to invest or place your trade when you think that is a good opportunity. Okay, good returns. It's at least 3-to-1 or 2-to-1 risk reward ratio, which means if you're risking, okay, this is your entry, it's your stop loss. Okay. This distance, let's say is 100 pips. Okay, and then you are expecting at least 200 pips. Okay, that's how you become profitable in the long run. Because by doing this 1 to 2 risk reward, you don't need to be a very accurate trader. Accurate means you have a very high winning ratio. Every time you trade, you are winner. You earn money. But earn how much? I don't know. But you earn, you don't lose money. However, by doing this, you don't need to be so accurate. 50% is very enough already. Because 50 times, let's say 100 pips, you trade 0.1 loss. That is equals to $100. Okay? So if you lose 100. If you win, 200. So your trading result will be looks like this. Okay? Minus 100, minus 100. Win 200, win 200. Minus 100, minus 100. Minus 100. Okay? You can have 1, 2, 3, 4, 5. Okay? 5 trade is, let me just get another one, 200. Let's make it 10. 1, 2, 3, 4, 5, 6, 7, 8, 9. Okay? And I have 1, 2, 3. you have 4 trade is winning and 6 trade is losing. Okay, but all these losing money, every time you lose only 100, so you lose 600, right? And your accuracy is poor. It's only 40%. Out of 10 trade, you only win 4. That is normal. That is not so extraordinary, right? Which means that maybe you're just a normal trader. You're not so talent trader. Every time you trade, you win. Okay, but 1, 2, 3, 4 gives you 4 times 200, which is 800. Right? And in the end, you still make 200 profit after 10 trades. Right? So if your result looks like this, you don't worry about the losing trade. Right? And I'm talking this to Jonathan. Jonathan, are you here? Yeah, Jonathan. Hi, Jonathan, can you hear me? Yeah, so I'm talking this to you, okay? Every time, if you have a losing trade, okay, don't worry about the losing trade, because if you carry your trade in this discipline, then no matter, when we lose a trade, you only lose 100 or lose 1%. But when you win 2%, and that's how you generate your profits from the long run, okay? And human nature is, when you have, sometimes you have this kind of trouble. You lose 100, lose 100, and you lose 5 continuously. What do you feel? Market is against me, right? I'm not good at trading at all. I'm a lousy trader. No, you are not one losing trade. Losing trade doesn't mean that you are lousy. Just means that you are a trader. Trader, only 2 results: losses and wins, right? Losses and winners. And losses are those trades you have to stop, because if you don't stop, it will not only lose 100, it will lose 1,000 maybe, right? So that's the key thing in trading. It's actually a probability game. Okay, trading is never a guessing game. You guess right, you have a view that may goes up or goes down, but you never trade. You don't earn any money. And even if you have one losing trade or one winning trade, doesn't mean that your trading skill is so perfect or so lousy. Okay, you need to take the whole trade that you do. Maybe in 1 month's time, right? I think you all should have using the trader log to record the trades, right? Yeah, we have given you the trading logs. Let me just log into the. Okay, where's your trader log? Do you have in your? Oh, is the internet done? Yeah, connected. Oh, on the power. No battery. No battery. Oops. Is the internet done or what? Mm-hmm. Okay, IG is good. Drive, right? No, not working. I think they blocked the Google. Really? Yeah, I think so. Let me just try another. Okay, they blocked the Google. Yeah, let me just use my. Let me just show you the trader log. Okay, you need to really to do this, because the habit you take a trading journal or trading log, will give you a very good learning curve to faster your learning experience. Okay, a trader log looks something like this. Okay. Where's the trader log? Yep, here. Okay, just download here. Wow, we have a handsome guy. Hello. People are okay. Okay, try. Hey, where's the? Oh my God. So web-based, right? Try, okay. I open from the web. Oh, okay. You may I just open here? It looks like it didn't. Maybe because Google Drive cannot use. Oh, okay, I see. I can use. Let me just try to use open with. Do you have other Office web? Let me use. Yeah. Okay, hold on. Let me just. Yeah. No worries. Just let this finish. Then we can use the trader log. Okay. So let's go back to the markets, right? And today we see that the dollar goes up. Okay. Look at here, guys. Look at here. I want to mark this level, and I want to mark this level. And please tell me that when the dollar goes up, right, goes up to 103.50, we still see buyers, okay? And who are these buyers who buy at very high? We don't know. Maybe institutions or maybe novice traders. But what is the result for them? Look at the next candle. It's losing money, you chase the price. So if you chase price, you lose. Every time it happens. If you cannot, tell yourself to be patient, to wait for the good opportunities, you chase the high and you lose. But for us, what do we want to do? We want to wait for the price to come back to this structure, right? To this structure. You want to buy it at a low. Sideways, okay, very close, but not our target, not our entry. So just wait. You wait, and your patience will pay. Your patience will give you very good entry level. Okay. I have been working in banks for so many years, and I have always have customers request says, "Hey Jack, can you help me to? I want to buy this stock. News just tells me the stock is very good. I want to buy." And when I look at the chart, the stock is at the high. So many times, every time, when people want to invest or buy something, they think that they are buying a good one because they already see it moves up. That is a problem of novice traders or new traders. He will only be confirmed that this stock is going up. This thing is going up after he says it's right. Okay, and then he start to buy the high. But for me, I will say it's 102.80 now is a very good time for to buy the dollar again. Okay, and you buy here, your stop loss should be just below this pin. Right? I don't need to have a very large stock because what does this pin bar tells me? Price. What is the pin? A pin is very simple. The pin is a record of a price movement, right? So this is a candle. This is a candle. Okay? It tells this pin is like the price actually goes down to here, and then it flips up to here. And then combine these two to make a pin bar here. And the pin tells you buyers. Right? Because price comes down to here and all the way buys up. So this pin tells me that a lot of places, a lot of people are buying here. And those people will be those institutional people. Yeah, because only institution orders can move the price to that high. Mass markets, the trading volume or the orders is not so significant to move the price to 1% or 2%. Okay, and this pin tells me yes, a lot of institution would buy here. So I want to buy together with them. Okay, and this is my stop loss, and where's my target? My target should be at least 2 to 1 risk-reward ratio, right? So if this is my risk, and then my reward should be at least doubles the risk here. So here will be my first profit taking level. And when it goes to 3 to 1 or maybe 4 to 1, okay, I may close it all. You don't need to hold for so long because you already have a 1 to 2 risk reward ratio. You already, by risking $100, you already earn 200, right? For the day, that's okay. That's very good trade. Every day you earn $200, happy, right? $200 times 25 days or 20 days, you earn $4,000 per month, right? So every day you don't need to earn $1 or $2. You just need to earn 100, 200. If you are a professional trader that purely trade on your own, you don't have any other work. And trading is your bread and butter. Trading is your whole business, and you don't set a very, very big target that is so hard for you to hit, to strike, but you accumulate every day. Per day, I don't want to lose 100, but my target is 200. Every day you're doing the same thing. And you find the best opportunity to take one trade. For example, now the dollar, right? Today, if I'm the trader, I want to earn my bread and butter. I just risk $100 to place this trade. I calculate the correct lot size and make sure when it goes to 103, I will close it. And I successfully just earned doubles of my risk. So I will add one result into my data book, right, into my trading log. And after 1 month, I just go back, review it all again to check, is my winning ratio about 40% or 50%? Is my risk reward really 1 to 2? Do I really plan my trade and trade my plan? You need to follow the disciplines. Okay, you don't say, today I want to risk 100, tomorrow I want to risk 1,000. and then that is nightmare. Okay, what if you really missed, you really lost the 1,000? You make all the 10 days of gaining gone, right? Okay. All right, let's move on. Okay, let's look at the euro. So euro, see here, just now we say in 1 hour chart, okay, 1.0450 is the level that we want to short, right? Look at the daily chart. You just mark the line here, okay? So if you want to short the euro, just wait for the price to pull back to 1.0460. That's the first thing that you want to short the euro, okay? But right now, it just pulls back to 1.0450 and it comes down, right? But do you want to chase? No, I don't want. Okay, you don't see, price come down, I never short, it's didn't missed by 10 pips, right? Then you want to just, throw in your orders. No, wait patiently. If that is 1.0460 is your entry, just wait for it. Okay, because if you wait, you save 10 pips. And it moves down 10 pips, you already break even 1 to 1. Another 10 pips, you can close the trade already. Okay. And another level is here. It's 1.0468. So for today, I'm going to just wait for the euro to come back to here. Then my question is, if never come back, how? If never come back, yeah, don't trade, right? You just wait for another opportunity. Change another symbols. We don't look at the euro. There are so many pairs in the market, right? We are not worrying about that we don't have enough trading opportunities, but we are worrying about if I take this trade, how good quality it is. Is this good trade or bad trade? Sorry? Bad trade trading, what's that? No, it's not about the trend. It's about your price. Because trading is like a business. You have it's just like today I come here. Okay, say for example, this lecture hall, I own it, I built it. And today there's people come here, you guys come here, I charge money, right? I take their booking fees, okay? And I need to measure, if I spend 1 million in this lecture hall, right? I need to open how many seminars to make it break even. The less of the building cost, I am safer. My cost is low. So I want to wait for 1.0460. It's the same thing. I want to make sure my cost is low. And then my rewards will be high. Okay? So if that is the level you want to short, you just wait for it. If never touch, you just don't trade. Okay? Don't be itchy fingers. Don't let your emotion to drive you. Oh no, you see here just now, if we are not if you are not patient enough, you see this candle, you want to short, right? You want to follow, you want to chase the price. Then boom, it starts rallying. And later, maybe you will touch 1.0460 and you will be regretting, oh my God, why should I enter so early? Right? Why should I wait for the level? Okay. So today, maybe the euro, okay, this is a place that I want to short. By simply looking at the structure, okay? So just remember the structure is the most important part. Without structure, you cannot determine where is the resistance and where is the support, okay? And then you look at maybe you can look at some other things. Okay, let's check the 1 hour chart. Okay, 1 hour chart, yeah. What is the trend now? Yeah, looks like it's sideways, right? Because we have almost the equal highs, and the lows didn't really come down to have a new low. So as long as the euro didn't break 1.0380, you cannot say the bearish trend continue. It just sideways. So sideways market, you can buy low and sell high. That's okay. Okay, but from the daily chart, we know that the higher time frame tells us the downtrend is more significant. So we want to catch the short. You don't want to buy it here. Okay? Of course, if you buy it here, your risk is also small, but I can assure you that your winning ratio for that trade is very, very low. You may be very easily stop out because that is still, a bearish trend. So in a bearish trend, just remember, when we talk about the trend, uptrend, trend. You focus on the low. But uptrend must have a higher low. Whenever comes down again and breaks the recent low, the trend may change. And then it comes down again. Okay? You don't want to, when it's a bearish trend and you want to buy the low, no. And when it's uptrend, you want to sell the high? No. It's wrong. Uptrend means that there's still upward potential, right? You buy the low. If sometimes you have profit here, but a lot of times you have some more profit. Another level keeps going up. Let the trend to be your friend. Okay, so in a downtrend, focus on the lower high. In a downtrend, what is your trading opportunities? Comes into the low or comes into high? High, right? Yeah, you want to short the rally. If you buy the low, boom, stop out. Buy the low, stop out. Buy the low, stop out. If you never stop out, oh well, you're just trapped. You're just tanking. Your money is gone, right? So that is the part for the trend. Okay, let's look at the gold. Okay, gold have a bounce from 124 to 1,1133. Can we say that the gold is, making a bottom here? Or you want to buy? Do you want to buy the gold now? Based on this chart. Of course, I don't want to buy because it is so huge bearish trend, right? You can see here, it's just keep dropping and keep making a lower lows. Gold breaks 1151. Breaks 1139, breaks 1134. And now, look at the price. It comes back to the 1134, right? And this may give us a hint that the gold, we can make a short based on the structure. Because all these people here, why do you think the price didn't break down until here? You see, the seller is trying to move the price lower, right? But at this stage, did they succeed or not? Haven't, not yet, because there are still people who are buying. They are buying because of the 1134. There are some buyers. There are some buying forces. And now, after it breaks down, is the buyer's trapped or not, right? Now, when the price comes back to here again, what will be these people doing? Probably they are going to cut the trade because they're losing small money now, right? So we want to maybe you can short here, but your target is not so high because you don't know that if the price goes down whether it will break the low or not, right? So you may only consider to take the profit here. Maybe this level, okay? Because this pink bar, this candle tells me there are some buyers here. So if you measure, okay, now let's continue to determine whether this is a good trade to short or not. Yes, you can short based on structure. That's the first thing. Second thing is, where's your target? Here, 1126, okay? Another question becomes, where is your stop loss? Your stop loss, at least minimum, you should be above this candle, right? Above this bearish bar. And to be safe, you add another $1 or $2 as a tolerance level or wiggle room. And then you measure whether it is 1 to 1 or 1 to 2. No, it's not approaching 1 to 2. So you know that you are risking 100, but you are only in return for 150 or 160. That probably may not be a very good trade. And look at the chart. Where will be the best place to short the gold? If you look at the chart, you want to sell low or you want to sell high? Yeah, here, here, or here. These three levels, where do you want to short? It gives you the chance. The best, yeah, 151, right? But your price is good. In exchange of what? How to get a very good price? You must pay something, right? You pay for your time, pay for your patience, in exchange of your patience. Right? For people who are not so patient, they want to short now. Of course, your price is lousy. You don't have a very good price, and you may suffer when the price is going up, right? So we need to actually make some choice. You want to short here, or you want to short here, or you want to short here. The problem of shorting here is you may miss the trade because not every time the price will goes back to here, right? You may miss the trade. And if you short here, looks good, still a very good level to short, 144, and the price may come, the probability is higher than, and you're waiting for 151. If you short here, yes, you will be in the trade, you won't miss the trade, you are shorting here, but your risk is higher. Your reward is not enough to cover your risk. Okay? So every minute, we traders, we want to measure the risk, measure the reward, and measure where is my entry level, where is my cost, where is my places. Sorry? Smaller stop loss. Yeah, if your stop loss is small, yes, correct. If you're using a very small stop loss, of course your risk is small, right? But if you only have this kind of tolerance, you're more easily to be stopped out. The winning ratio will getting lower if your stop loss is very, very small. Okay, because just one spike you're just out. All right. So why we want to sell the high? Because when you pay attention to the high or pay attention to the low, okay? Why you want to sell the high? Because if you sell the high, you have more winning probabilities. Give you a good probability to win because your place is very high. You pay your patience. In exchange of patience, you have a very good level. And the price, if it goes back to 151, how much further it can go, right? The energy already used up, right? But it comes here, yeah, still have possible to go to 144, right? Of course, if you short here, if you really short here, your winning ratio for this trade will be the highest among these three, okay? Because the price tells you that here 151 is the best shorting level, okay? And you have a more room for profit. Even when the price comes back to 124, you already earn $26. One lot is 2,600. Okay, so we just want to sell in the high and buy the low. Okay, so today maybe for the gold, just remember the 151 is the best level to short. Okay, because this is not yet touched yet, not confirmed to retest yet. Okay. Here have some kind of resistance, but looks the location is not good. It's like buying properties. Location. Yeah, location, we want to sell the high. We want to buy the low. Okay. Okay, let's check what is in the chart. Do you prioritize structure over fit? Yes, I do. Yeah. Will says there will still be opportunity, right? It seems to be back to yes, correct. The euro 1.05, maybe not. For the euro is 1.0460 as we discussed. All right. Okay, let's go for the sterling. Okay, sterling is something different than the euro. Okay, we can see here. Let's compare. Let's do a comparison. You have to understand that when the euro breaks this low, okay, the sterling didn't really. Did sterling break new low? No, it didn't. Right. So this tells you that the sterling is stronger than the euro. Okay. And if there is one currency you want to buy in this stage, we know that the dollar is strong. It has to be sterling. You don't want to buy the euro because euro is confirmed the bearish market, makes new low, but sterling, not yet. Not yet. And the reason is because previously sterling drops too much, right? When the sterling actually drops from, you see, from 1.5 all the way to 1.2. However, how much did the euro drop? Euro only dropped this little, right? Because that is still the value investing. The sterling is in a very, very low place, low location, right? People will feel that, yeah, no, sterling is really cheap. It's really cheap, right? I want to buy the sterling. Or if I want to open a business in the UK, it is cheaper for me to raise funds, right? If I have 100,000 US dollar, I can convert, much more sterling than before. And how about the institutions, those corporations who have headquarters in the US side and open business in the UK, right? They have lesser human resource costs. They have lesser, all the rentings are getting low, right? That's good for them. So I want to spending more. I want to just increase my capital, right? So there are still some people who are buying the sterling, okay? And sterling, if you want to short, wait for it to pull back to here. Same thing. There is a double top. Okay, why there's double top? Because we see the price goes up, comes down, goes up again, and then breaks. Okay, so this is a double top, and for the double top, the strategy we want to trade is the 2618. Okay, what is 2618? Is when you see a double top, and you just measure the Fibonacci retracement from here to the low. So this tells you if you want to short the sterling, wait for it to come back to 1.2622. That will be the best ideal place for you to short. It's very near to the neckline, right? Some little higher than the neckline, so you have a better price to short. Yes, you are right, Jamie. Sterling bat. Oh yeah, but Shane, just trust me. If bat, this I know there's you say there's a bad pattern here, okay? But check where's your X point? Is your X point at this low? No. Okay. We don't want to use middle X point. We want to use the extreme X point. Okay. So, and you know that the trend now is coming down. It's a bearish market. So you don't want to find some bullish patterns. You want to find some bearish patterns. The bearish pattern is here. This 2618 will give you, if the sterling ever rally to 1.2622, you want to short. And your first target will be here. Second target will be the previous low. Maybe 1.21 or 1.90. Okay, because this is a lower highs and lower lows. So this tells you the sterling may become a bearish trend, right? And we want to, for the bearish trend, we want to short, right? See, previously maybe an uptrend. Okay, so this double top is actually finish of the previous uptrend at the finish by breaking the neckline, right? Come here, although there may be some harmonic patterns where you want to buy, but if the trend is going down, we want to find some bearish patterns. So wait for the price come back to the 618. And sure. You just things, same thing happen over and over again. Just check here. Right. You see here? This chart. What we have a similar pattern, right? Double top, right? Double top breaks you see when the price didn't break this level, we don't say it is a bearish trend because we still have higher lows, right? It's only when the breaks down of this low, it actually tells me that yes, the bullish is gone. The bullish trend is gone, and now it may become a bearish trend. So since it may forms a bearish trend, I want to join the bearish trend when the price pulls back. Give me a higher place to short. So we use 618. Come, let's see. Okay, and it really comes. It really comes, right? You just wait. Okay, when you see the rally, hold, wait, comes down. Okay, maybe this one is some kind of, oh my God, I should short. I just enter. I missed the trade. No, we know that a double top 2618. Yeah, and you short at 1.5634, and then look at here. And you enjoy your very. See, the first target is hit here, right? Close half. Remember, don't close all, because if you close all, later on, no matter how much it falls, it's none of your business, right? You don't earn a single cent because you close it all, unless you short it again, right? But remember this phrase: don't lose your position in a trending market. If you know that it's a bullish market, right, and you have bought it at a very low, okay, don't sell all of them. Don't lose it. You can take partial. You can sell a little bit, sell a little bit, okay. But if you sell all here, that's gone, done. You don't want to buy at high. You dare not buy the price at high. Okay, don't lose your position in a trending market. And especially for us, we are always trying to catch the new trend at the beginning stage of the new trend, right? Here, because the key thing is here. When we spot the price breaks down the low, ding dong, okay, something is happening, right? Sterling keeps going so strong. Why he actually breaks the low? It tells me that the trend may change. There may start a new bearish trend, and we want to catch the bearish trend at the beginning stage. So we wait patiently for the 618 trade. We wait patiently, and yes, you get it. You are actually shorting the sterling at the turning point, right? And right after you short, you have very good profit. You take some profit, just like just now this trade. You take half. The rest place it break even, pulls back, doesn't matter, comes all the way. You see, if you never take profit, James, answer me. If you never take profit here, and you see the price all the way comes back again, what do you feel? You feel wasted, right? Oh my God, just now I already win 2,000, now it becomes only 200 already, right? I should have closed it all, right? But if you have already taken some profit, you take 1,000. You feel, it's okay. I mean, I don't care whether it gives me a 200 or 400 in my rest position, because I already earned the first position, right? And you just patiently hold the position. Yep. Yeah, break even. Yes. It's because why I don't teach you guys to move the stop loss to be very aggressive. Okay, it's because firstly we have already taken some profit. Okay, to make sure that it's a winning trade. Secondly, when you put your stop loss to be break even, that is the maximum tolerance you can give for that trade, because the so-called the bottom line. The bottom line is I don't want to lose any single cent for the balance trade. Yeah, is okay. So because the more tolerance you give, the unlikely you're going to be wiped out, to be stopped out. You have a safer stop loss level. If you put your stop loss too aggressively, of course you can lock the profit, but you are more easily to be, get out from the market. Right? So the break-even stop loss is the best you can do. That's the maximum you can do already. All right, and you just hold it. Boom. Okay. Breaks new low. Good sign. Still continue. Breaks new low again. Okay, all the way. Just hold it. Wow. Wow. Right. You shot from 1.5634 and you earn 1,400 pips. And you still have half position, right? So the more it falls, the happier you'll be. But if you close all at that time, you feel that, oh my God, why should I close so early? You feel what? You feel greedy, right? Or regretted, right? So that's how you control your emotion, right? Because you don't want to, to slap in your face and, why should I close it so early, right? And of course, I don't want to lose my profit. So I want to take some profit and then let the risk-free trade to free run to enjoy a better profit. Just do a simple calculation. From 1.5630 to 1.51, you earn 500 pips. And if you short one lot, you earn $5,000, right? But you only take half. The reason for you to take half is because I want to make sure half money is mine, and then I want to give the balance trade a maximum tolerance to let the rest of 2005 become maybe 25,000 to have unlimited gain. That's why I want to take some profit first, but I don't want to take all. And your risk is your balance position. Okay, you have two portions, one on 2005 and 2005. Okay. Now you have a choice. You want to secure all the money on the table, or you want to let one part of them to become, more $5 or maybe $7. Yeah. For some people who are very conservative, okay, you can choose to. Yeah, that's the money I get. I just want to take it all. But if you take it all, later when the price keeps going down or moves in a very, very good trend, tell yourself you don't feel regretted. Otherwise, you will be very, very, that is a very, very heartbreak. It's really heartbreak. Imagine, look at here. If the people who close all the short position are here, you just waste for the break exit, right? 1.56 to 1.2, 3,000 pips. And 3,000 pips, if you still have, 0.5 lot, how much you win? How much you win? 0.5 lot is $5 per pip. So $5 times 3,000 pips, 15,000. We just missed 15,000. You can choose to look left. So you see here, you can choose to take another. You can look here. Use this one to as your profit taking. You can take another. You have 0.5, right? You take maybe another half. You take another 0.2, right? And then if this one still goes down, just happily hold it, and just wait for it. Just hold it, right? Even if it just goes back all the way, never mind. You already earned a lot of profits, and that's the institutional behavior. Institutional buy at the low, goes up. They always have something to sell to the people who want to chase the price, right? They don't want to sell. They don't want to lose their position. Okay. Jamie says 261 gives 60% win rate, but R is 1.45 based on TP1 levels. Then you lose money in the long run. No, Jamie, not really. If you calculate the probability, let's just there's only one scenario you lose money, because it's like you are risking $1.5 to earn $1, and the risk ratio is, and the winning ratio is 60. Let's just calculate, all right? So you have 10 trades. You have 10 trades, and every time when you win 1.45. And every time when you lose $1. Okay? So this is potential gain. This is potential losses, right? And out of 10, you have 60% winning. So 1.45 times 6 is here. Another is times 4. Did you lose in the long run? Jamie? Just calculate for you. Yeah, 1.45, right, times 6. You earn $8.7, right? So it's $8.7 minus 4. You still earn 4.7. It's confirmed it is a winning strategy, because your R ratio is still above 1. If R ratio is above 1 and your winning ratio is above 50, you sure win the money, right? Because you are getting over $1 for $1 loss, and you have 50% above winning ratio. You are sure winning, right? So that's why the 2618 trade is very good strategy. Yeah, because overall it has very high accuracy. Okay, 60% or more is the winning ratio, and the risk reward ratio is 1 to 1.45. Comparing for the first target is 1.45, and after the first target is hit, the second target is your risk ratio is unlimited, because you won't lose any money once you move the stop loss to break even, and you can enjoy the later on to catch a very, very nice trend, right? Okay, so starting today, as we say, yeah, just wait for the price to come back to 1.2622, and we may have a short opportunities. Okay, and your first target, your second target. Okay. Sterling will go down because the euro is going down. They are brother pairs. They are all European currencies. Okay, so if the euro is keep going down, which means dollar is strengthened, so there's no way for you to have a long-term bullish sterling view. No, never going to happen. Okay, sterling may still goes down compared to dollar, but compare sterling to other currencies, maybe sterling will be the winner, because the other currency may drop more than sterling do. So you look at the sterling yen, very obvious. You see, sterling yen, huge uptrend. The reason is the yen drops more than sterling, right? Dollar yen keeps going up. So the sterling yen still goes up, although the sterling is dropping compared to the dollar. And that's why when I say when the dollar is in a one-way market, you don't want to trade a cross pair. Because if you want to short a sterling, right, your sterling dollar position will win the money. However, if you short sterling yen, you're actually taking two trades. You're taking both the sterling GBP USD, you're taking the short, and also you're taking the short of dollar yen as well. You are short the dollar yen. But the USD is going strong, we know that. So GBP USD, this one, you have a positive, let's say $100. But you short dollar yen, you have negative 200. And in the end, if you short sterling yen, you're losing money. Okay? Because dollar is so strong. Dollar goes up, sterling will go down, dollar yen will go up. So it's only when the dollar is sideways, and you may consider sterling yen to increase the volatility of the pair you choose. Because when dollar is doing nothing, you see, when the dollar is doing nothing, both the GBP and the dollar yen will not move, right? The dollar is doing nothing, the GBP will have in a range, yen will in a range. However, if you combine these together, sometimes When the sterling goes up, that doesn't necessarily the yen will goes down. The yen may goes up as well. So then you have dollar yen, sterling yen. If you long sterling yen, it's better than you long the sterling and better than you long the dollar yen. Okay, but when the dollar is too strong, you don't trade cross pairs. Okay, because it cancel each other, and sometimes your direction is wrong. Because at this stage, of course, we see the yen is like, keeps falling. Okay. Any questions? GBP right? Okay, let's check the sterling Aussie. Okay, sterling Aussie. Okay, you can see here. What do we see from sterling Aussie? Okay, guys, this is a very typical bottom that we call a U shape. This is a U shape bottom. Okay, so when you see a U shape, it actually tells you the market is so scared. It's all the way, 90 degree goes down, flat, right? And then 90 degree goes up, which actually tells you that below this, right, the whole thing, this thing is a mistake. It's a mistake. It shouldn't come here. Why it comes here? Because so scared because of the greed or the fear. The market is like the sterling crash. The GBP/AUD goes on here and maintain not a very long time, but it shoots all the way up. The key thing is it can shoot all the way up. If the bearish trend is so obvious, do you think you will see a bullish candle and shoot all the way up to to take away the origin of the move here? The origin is here. See, why does GBP/AUD fall? Because this structure, right? Previous as support, breaks down, retest, cannot go above, then the bearish trend continues. That's how the bearish trend, why the bearish trend continues. Is because this level becomes a resistance at the time. However, the price cannot go furthermore, and then it all the way comes up again to here. And look at the price here. Do we have a breakout at this level? Let's just mark these two places. You can see here, the price didn't really break out when the first touchback comes back at this level, right? So this still tells you that it is not a bullish trend yet. You can only say, yeah, it is sideways because you have equal highs and equal lows. However, the bearish trend is finished. Because bearish trend must have a lower highs and lower lows. It didn't have a lower lows anymore. Right? Instead of lower lows, they have equal lows. And instead of lower highs, it have a equal high. And this tells you that now the things, we are no longer bearish on GBP/AUD. And then comes down again, but very importantly is, you see here, it breaks out this level. So for the U shape, if the price can finally breaks out and comes back for a retest and maintain above this line, you can see here all these people, all the buyers and sellers, all the trades are complete at this level. It actually doesn't make sense. GBP/AUD will no longer be traded at this range anymore. And if you combine the patterns, you combine the candles together, you combine all the, okay, let's say here is October to November, right? How many months? 1 month, 2 months time maybe. Okay, let's just go to, I entered 2 months chart. All right, let's check 2 months chart. Okay, not the. Okay, 1 month chart maybe. Yep. Okay, you see here, it actually comes down, right? And forward goes up. And the closing price is even higher than the previous one. Still, yeah, this closing price is down, but you combine these two, what do you have? Here's a long pin bar, right? Long pin bar. The pin represents buyers, represents buyer forces. Yes. I want to long the GBP AUD because, firstly, do you think it is at a very low price? This is a monthly chart. Previously, at 2002, GBP AUD is at 2.93, and now it's only at 1.69. What is the percentage of discount? If this is a good or this is a close or bad? Right? Pick like 3 to 1.5, almost 50% off. Right? A goods that is 50% off. And in the financial crisis, okay, and also in the recent 213, there we can see from the technical side, here is a very important level. This part, this structure here tells you it comes down and bounces back, and the trend is likely to be reversed in a weekly chart. Right now, you look at here, didn't see any, there's no trend at all because the weekly candles, we have 2 weeks, the GBP AUD is doing nothing, right? But looking at here, this bar is so important. So guys, we need to know that which candle is the determination bar, dominating bar. This is dominating candle. Why? Yes, because this candle, if without this candle, can you say that there's any bullish sentiment from this? No, it's still bearish trend, long term, right? Still, although we have a one, but it didn't really based on the original of this bearish move. However, after this candle, wow, let's make a difference. This candle makes a difference. Tells you that yes, it may go up, continue to go up, right? And then 1 week sideways, 2 weeks, now it's sideways. However, in the daily chart, goes into the smaller time frame. Okay, so remember, no matter what happens, don't trade in the bigger time frame because you have a huge stop loss. Okay, trade in the smaller time frame. So in the daily chart, what do we have? We have a breakout. We see a breakout, right? And we see a pullback, right? Where does it pull back to? Let's take a look at this level. These two candles becomes, let's adjust a little bit here. Look at these 3 candles, 1, 2, 3. The price is below this level, right? This is resistance. And when the price go beyond, okay, so for after this candle is a determination. We determine the price is finally breaks through this 1, 2, 3 candle, goes up, or keeps moving higher, and now it comes back into the same place. So we can assume that, 1.6812 is a support now. And since this one is a new support, do we have a higher lows? This is a previous low, right? And before that, you can see here, for the sterling Aussie, the lows is moving higher, okay? Right? So our reason for long this pair is very simple, because since it's still moving higher lows, so it's still in an uptrend in the daily chart. Although now it's sideways, but this sideways comes after it breaks a new high. We know that for the price breaks a new high, it may come to rest for a little bit. Correction may happen, right? But when the correction happens, it actually creates a higher lows. And this tells us, yes, we may have a good chance to buy. as long as the price didn't really break down. If the price comes back again, breaks down this level, then the trend is totally changed. Right? It is no longer having a higher lows, but it violates the higher lows, having a lower lows. So now this is a tradable pair because we know that GBP is still quite strong among all the non-major currencies. AUD is falling, Aussie is falling, and gold falling dramatically, and Aussie will follow, right? And Aussie is so-called high yield currency. It is high yield because when the dollar have lower interest rate, like yen lower interest rate, euro lower interest rate, so the Aussie bonds or the Aussie assets seems to be attractive because they pay good money flows of coupon rates or the interest, right? However, now the dollar the dollar's yield goes up. So do you think if you give you a choice, I give you $1 million or 1 million Aussie, you want to hold 1 million Aussie or you want to hold equal amount of US bond? Although you may earn some money, I mean, you may earn more interest from Aussie side, but you feel that Aussie may not be safe because dollar is so strong, right? I wait for another 2 years, although interest rate I earn maybe 2% or 5% difference, but my currency depreciation may be more than 10%, right? So that's why we want to long the sterling Aussie, just based on the higher lows and higher highs, and now it comes back. And you can see here, yeah, test a lot of times, 1, 2, 3, 4, 5, 6. Really tells you that, yeah, the price is now maintained above this level. So as long as it doesn't break the lower low, you're okay to buy, right? And your target, where's your target? Yeah, you should be stopped. And I publish an idea in TradingView because I see this pink bar here, this bar, okay? Why I see this pink bar? Because this pink bar happens in the night of FOMC meeting. Yeah, but on the same day, right? Okay, if anything bad is happening, tell me. If anything bad is happening, the fundamental is against me, right? The GBP Aussie falls and breaks the pace low, right? It should happen already. But after the FOMC meeting, it still goes up. It tells me that, yes, this pin bar makes sense. Even after such a risky event, such a volatile night, right? And still cannot go down. This gives me the confidence. Because that is the biggest event in this year, right? So do you think there's any other things will drive this force to go below the FOMC meeting days low? I don't think so. Unless they say, yeah, sorry, I don't want to hike, I want to make adjustment, all right, or something other happens, like the Carney in the BOE says, I want to QE more, right? Better crash for the sterling, unless that's like something like this happen, right? But right now we see here, price goes up, comes down, tests it again, and what is now? The recent 4-hour chart, this candle is very, very nice, right? It tells me that, yes, 1.284 still has a lot of buyers, and this one breaks the high of this one. So this is a very good sign. We see the buyers comes in, right? The big institutional guys are buying, studying Aussie, and looking at the AUD USD. You see, Aussie, do you see that Aussie is making a very strong support now? No. Look left. Yeah, there may be some support here, but you really go to the daily chart. Where is the Aussie now? The Aussie is in a higher location or low location. In the middle, right? Space for Aussie to fall is huge, right? If we find the sterling Aussie whilst Aussie is in this place, maybe trouble. Once we know that the Aussie is not for anything, it's hard for them. The secret of the cross pairs is ultimately is about the value. Okay? So when you have any pair A versus B, okay, cross pair. If you want to run, let's say we want to run. Okay, let's say we want to run. Okay, there are two scenarios you may win. A USD goes up, or B versus USD goes down. Either one happen, you will win. This one will goes up. So in this case, it's either the GBP rally or the Aussie fall will make the GBP Aussie goes up. Make sense? Right? So Aussie is in this location, high, middle, right? Something middle. So Aussie still have more room to go down. So if Aussie goes to 0.69, I don't need sterling to go up. Sterling Aussie will just goes up. Because that's by simple math, right? We just, okay, let's say here, right now, okay, right now the sterling Aussie is at, let's just sterling Aussie. Let me. Okay. Oops. Okay, right now it's 1.6942, right? And sterling is at 1.2434, okay? Sterling at 1.2434. 1.2434, yeah. Sterling Aussie at 1.6942. Imagine, if sterling remains the same, this one remains the same, right? Aussie goes to let's say 0.7. AUD goes to is now 0.7. The sterling is still same. Sterling is 1.2436. Sterling is this much. AUD is 0.7. What is the Aussie to sterling? Very simple, just 1.2434 divided by 0.7. Right, let's check what is the result. So 1.2434 divided by 0.7. Boom, 1.77. Where is sterling Aussie now? 1.69. And by looking at the chart, if the sterling remains the same, sterling does nothing. Aussie falls to 0.7. Then we drive this sterling Aussie to 1.77. And you know that, yeah, we have 800 pips to go, right? But the factor is the sterling may not go up or may not maintain. Sterling may also fall, right? So sterling may not be 1.2434. It can go to 1.24. It's okay. Or it maybe can go to 1.20. That's also okay. But it's just the things. The Aussie falls more quickly than the sterling do. Then the sterling Aussie will goes up. Okay. So you need to have this kind of mathematical thinking. Okay. Yes, because we just compare these two. You see here. By right, they will move the same direction if the US dollar is in a one-way market, right? However, before the US dollar is in a one-way market, you tell me, right now, do you think all the, let's say they want to get a money, so it goes out for the stuff, but the sterling is already very, very low. But all these here, not here. The only compensate for the downsizing. Yes, likely. I don't need to worry about when the sterling is going up or down. I just know that this difference was going from all the way to here, right? Right? From here to from here. That's a problem. And that's the trading opportunity comes. Okay. Aussie from 0.68 to 0.79. What does sterling do? Sterling is, sterling falls. So this is an abnormal scenario. The reason is the pre-exit. Right? However, in this kind of Aussie will be more sensitive than sterling in terms of the yield, because Aussie is a high yield currency. Okay, Linus knows that when we talk about bond, if you are trading high yield bond will be more sensitive if the treasury yield goes up, right? Because high yield bond, those companies are not so big companies. Are those companies who are very hard to raise money. And that's why they have to give an extra coupon. For example, I'm a Bank of America. You are, I don't know what kind of factory or kind of company are raising the bond. Why should the investor to pay to lend money to you rather than to BOA? So you have, if I'm offering 1%, you have to offering maybe 5%. You can get the money, right? So now the interest rates goes up, the basis interest goes up, right? You think BOA will worry more or the small company will worry more? Small company. You have to risk higher, right? And the rate the yield, the interest rate keeps moving higher. Do you think BOA will be still okay to raise fund, or the small company will do? No. Small company will have trouble because people will worry about, is your cash flow able to pay for the debt or not, right? Yeah, so Aussie will be more sensitive in terms of the yield change, in terms of the US dollars interest rate. So Aussie will fall more than the sterling did, because sterling is already in the low location. Lesser room for the sterling to continue to fall, but Aussie have more room to fall. So sterling Aussie is still okay to buy. The same thing for the sterling Kiwi. If you look at sterling Kiwi, it'll be the same thing. See, sterling Kiwi from 2.5 to 1.7, low, very, very low location, right? And if you're an investor, do you think now it is worth to turn the Kiwi into sterling or turn the sterling to Kiwi? If you leave the UK, do you think that now it is good time to go to New Zealand to travel? No, because your sterling is only 1.7 now. You exchange lesser money than you did in the 2 years before, 2.5, right? But you are people who live in New Zealand. It's a good time for you to go to the UK to spend money, right? Cheap, right? Last time 100 sterling equals to 250 Kiwi, right? Now the same amount of sterling only means 177. Wow, I feel like it's counted, right? You go to the UK's 5-star hotels, you go to the Marriott's or the Ritz-Carlton, right? Still the same amount of money, 600 sterling per night, right? But you are paying lesser Kiwis, right? Yeah. So I mean, people will have feel which direction should we choose to convert the currency to, right? So sterling Kiwi still may goes up, and from the chart, it's very easy for us to determine. You see here in this weekly chart, it's similar, quite similar to the sterling Aussie. This bar, right, tells you that this fall doesn't make sense. It is false breakout. It comes back all the way, right? So this one may still goes up to 1.98 maybe, ultimately, that is a place it goes likes to go to. And again, we have this kind of view. Potentially, the sterling TP may go to 2 or 1.98. And how do you catch the trade? You want to buy, right? But do you want to buy when finally we see that there's a bullish trend? I want to buy 1.9. Why here? I want to buy the early stage of the trend. Because when the price finally goes to 2, after the price goes to 2, I believe 99% of the people in the world will say, yeah, this is a bullish trend. The price finally comes up, right? However, I don't trade because before it comes to this place, I don't believe you will come. I don't believe you, right? It's only when it's getting closer, going higher, and I start to believe you. And people, yeah, they buy at the high. But we want to buy the low, buy the beginning stage or the middle of the stage, right? Okay. Any questions from our international student side? Guys, Jamie, any more questions? Feel free to ask. Okay, all good, very good. Okay, let's talk about the dollar yen. Okay, I think maybe it's good for us to have a 5 minutes break. All right, let's have a 5 minutes break. All right, because I need to drink some water. Are we back? Okay. That is quite a fun event, right? We have a lot, like 10 people in the live and the live session, and also 12 people in the. Oh, Annie's here. Who is this iPhone? Who is iPhone? Isaac, Jamie, Jonathan, Ken. Ken's here. Will. All right. Okay, let's continue with our analysis with dollar yen. And okay, so dollar yen. Recently, we have a very nice opportunity to buy the dollar yen here when it actually moves up to 105. But we wait patiently for the 618 trade. So this is a very good example of a 2618 trade. Okay, because we see the price comes down, right? Make this first drop. We form a first bottom, second bottom, and a double bottom. So this is a double bottom, right? Right. So double bottom after it breaks up this, give us a hint that yeah, when the price come back to the 102 level, we want to buy. And it really comes. And we bought here about 101.80, right? Before the Trump, at the day that Trump win the election, we bought here. We bought at this level, and then you see, we have a very nice entry. And how you manage your trade is you need to be very clear that when you want to take profit, right? So the first profit is very, very simple. It's always the previous high here, okay? So if you buy one lot here and you see 105.47, you take some profit, that's okay. And you don't take it all, because if you take it all, then the 1,000 pips moves, you just wasted. And just remember, we take half and keep half, but with a risk-free trade, and just hold it. Just hold it. And a lot of people, if they miss the trade and the dollar yen keeps going up, they say, yeah, since I missed the rally, I want to short. And they get hurt because it is uptrend, very bullish uptrend. Together with the technical side and also the fundamental side, all support goes up. Because dollar yen has been dropping too much from 125. In the beginning of this year, see, January 28th is still at 121, right? It drops to 199 even, and now it comes to 118.20. Okay, so do we still see an upside potential for dollar yen? Is there any upside room for it to go further? Yes, we do. Right? It is not at 125 or 126. Right? Previous high is here. It's here. So it is still very likely for the dollar yen to at least to go to 121 to this level. right? Because all these previous sellers are gone. When the market, when there's no sellers, what will happen to the price? It just goes up because there's no sellers. Nobody wants to sell, right? All the people want to buy, right? So for the dollar yen, what we can do is we want to focus on the buy. So where can we buy? Of course, when it comes back to the previous structure here, right? When it comes back to the structure, yeah, maybe a good time for us to buy it again, right? And it goes back to the 5-minute chart. And yesterday, guys, this is a perfect example of how to buy the rally when you see a retracement. Okay. Yesterday I make a buy at the dollar yen at this here. The reason I want to buy here, okay, you see, the price keeps going up, going up, going up. You don't chase, right? And you wait for the pullback. Okay, the first pullback comes, but don't buy the first pullback because the first pullback may not be completed. And you just keep waiting and you will see that, okay, now I have a potential ABCD move. We have a down, that is the first pullback, right? And then the price rally again. But this time, the rally didn't really go to the previous high. So this tells you that the price may fall one more time, right? And then by just using the AB equals to CD pattern, okay? Just copy it here to here, you see. We just touched nicely at this level, right? And due to this ABCD move, I know that the correction after ABCD move, this correction will end. And the price will continue to go with the original trend. What is the original trend? It's here, right? It is this all bullish trend is here, all the way. So a very, very strong bullish move. Just remember, this just happens every time. Every time. When you see this kind of pattern, that is a very good part for you to buy. Okay? When you see a very strong rally, and it pulls back here, bounce a little bit, and pulls back into here. And use the AB to CD move. And look left. Is there any structure here? Yes, it is. Yeah, the price comes back in, rally a little bit, all the way goes up. So this is a structure, right? When we look up this structure, and it just sits nicely on the move. Okay? Look left, find the structure. ABCD will complete it. You want to join the trend. The best part is by here. Not by here, not by here, not by here, not by here, but ABCD will by here. That gives you the best entry point. And immediately you buy. This is 5-minute charts. You see, after that, from 10 o'clock, I buy. 11 o'clock, I close the profit. And I win how many pips? From 117.70 to 118.50. I win 80 pips in 1 hour. And tell me, do you want to catch such a kind of trade every day? 80 pips. Very good already, very good result. Right? You buy one lot, you earn $800. And that's enough for a trader. $800, yeah. Quite a big money, right? A lot of people working in Singapore can only earn maybe $3,000 per month. And you just earn $800 per day. Right? So that's how the trader, we catch this kind of high quality trade. Yeah, you catch how you take the profit, how you make sure you get in the trend. Follow the trend is never follow at the high. Don't follow the trend at high. You want to buy the low. by the correction, and then boom, it hits up, right?
You're saying that ABCD is guaranteed, but then
Not say guarantee, it just occurs so many times. You occur everywhere. Yeah.
this relevance is very high.
Yes, the winning ratio for ABCD pattern is more than 70%. More than 70%. Yeah. And the risk reward is very nice. Okay. You see, I take profit here and it comes down again. Right? And then what is now? Now the dollar yen just keeps moving. So the whole day, dollar yen don't make any higher high, any lower lows, right? So today, dollar yen is sideways. Do you agree? It didn't actually really breaks out 1180.40, 60, and it really didn't really makes a lower low at 1170.83. Now it is right at the middle, right? So what is the trend now? What is the trend in 5 minutes? From here to here, we just see a structure being violated here, didn't we? Right? So if you want to trade right now in this 5 minutes chart, you can make use of these breakouts. Right? Here is buyers, right? Why are you buying? Buy the pullback, right? And let's close pullback. And then punch goes out and boom, it comes all the way up. And look at this candle. This candle gives a very good entry. Yes, it did. So this, if you see this candle, boom, there's a pink bar testing this structure, then you go for a short. Right? You can find these kind of patterns appear every time, not over and over again. By simply just reading the chart, trade what you see. Yeah. And at the point where you're short, if you tell this short area to someone else, a lot of pressure will come in. Oh, the way was so high, why on the short? I don't care. I see the chart, it breaks up and pulls back, and pulls up. Why short? And I have profits. I can take profits here. Right? Where's the dollar is going up? That doesn't mean that I cannot short. You can still short. Right? The short with a reason, trade with a reason, trade with logic. So if you short here, now, okay, you already earned, okay, 7 pairs. And you just wait for the price because we know that the most important structure is here, right? So is it possible for you to make a target to here and then to here? Yeah, it's reasonable, right? And you know that, yeah, I still have some down room to short, right? But you don't want to say that, yeah, dollar yen is totally reversed in daily chart. I want to have this kind of targets. No, that's impossible for the day. Right? So take some profits when it goes into the opposite resistance or support. Okay, make sure you know very clearly where you want to exit the trade. Either you want to take a stop loss or you want to take a profit. And the reason why we want to, why you guys come here, why I want to offer a course to everybody to let people to let's study about the market, study about the trade, right? Thing is, in Chinese, okay, there's a saying that, you know this kind of saying? Okay, it's called a 四十不惑. What is 40? 40 is, that just means 40. 40 years old. So it says when you are 40 years old, okay, 4 means that you are not confused. Okay? Why we have this kind of an old saying that when you are reach age 40, you won't be confused about life because you have encountered so many things, right? You have kids, you have parents, you have encountered newborn babies, and some of people die, passed away, right? Your career, right? In the old times, you're almost done. What are you doing? You're just doing for the rest of your life. Right? If you're a soldier, you're just being a soldier. If you're a chef, just being a chef, because you have already been 40 years old. right? And you are not confused in your life because you have experienced everything, almost everything, right? Every pattern, right? How your bosses are going to treat you, how your wife is going to treat you, how's your relationship with other people, right? You are very familiar. You know that, yeah, this is life, c'est la vie, right? This is life. So in the markets, what I want to offer to you guys, to all the people, what I want to share in the trading view is like to make people not confused. But people will get confused if price just keep moving up, down, right? So confused. Buy, sell, up or down. Every day ask, hey sir, what is your opinion for gold? How do I trade gold, right? What's your view? I say no view, just trade what you see, right? So I want to let you guys, you guys also need to understand how you want to make this is your direction. Don't ever get confused in the markets. You know clearly. So not confused means that you know what to do. If one day you check yourself and you can clearly that no matter what kind of charts, what kind of events comes, right? You are very pretty sure that I know what to do. And you are a very good trader already. You'll never be confused. Because even your stop loss, you know that yes, I know that it just doesn't work. It's just a losing trade. I don't want to short anymore. I want to exit first with the stop loss, but with a small loss. Okay, and if I win, I know that yeah, that's part of my plan, right? This is part of our plan. I know that the price may not go beyond the previous high, this structure. So that's why I want to take profit. So you know you are ready for any movement of the markets. So you'll never get confused. So this is the direction that you guys need to go into. Okay, focus on doing things right, doing the right things. Don't focus on the profit and losses. At the beginning stage, when you are learning, you are building your system because you don't know how is your system going to work, nicely or not, or lousy, right? You don't know. So at this stage, you are still building your system. Focus on, have you done the thing correctly or not? Did you make a good expectation of the support of the entry? Did you put your stop loss at the right place? Is your risk reward more than 2 or more than 3? Right? Did you take profit when it goes to the structure? Right? You have all the expectation and just check every day after the trade before you go to bed. Check what you do today. So trader log is very important. Okay, trader log. I'm not talking about the log that the MT4 or your software will bring you. Okay, that is just system generated. But the thing is, you need to know how to record everything, record your thoughts. Okay. Okay. Never mind. I may not use this one, but okay. So just remember. I hope that you see. Just now, if you short, we short at 118.20. Now it's 12. You earn 8 pips, right? Yeah. And when the price comes to 118.00, this level, you want to take profit. You can take it or you can just take half or take 2/3, because the trading opportunity is everywhere. Which one? You mean this one? The bottom part. Okay, you mean this part? Oh, okay, this one. Okay. Yes, it fulfills at the 2618, but however, yes, this is a 2618. But you need to look at the big picture. Is there support at here or here? Which structure is more important? The left one, right? Because this one already, price already comes in, already bounced back, right? If you're talking about the bottom must be at a very low place, okay? But here, check out the 5-minute charts. Actually, there is a tiny double top Let's check the 1 minute chart. Guys, see here. Okay, we see your first top come here. We see another top, right? And it breaks. The important thing is it breaks down this level. The 118.35. It breaks down, right? And you want to trade the short. You don't short here. You don't want to short the low. You want to short the pullback. So you can always use the Fibonacci ratio to measure it. Okay, and then I just wait. Okay. Okay, here. So when the price comes back to here, that is the level you want to short. Do we have similar patterns? Right, we do see this is the first top. This price ready again, and the bounce close below of this neckline. Right, and then I just wait patiently when it comes to near to the 618 level. 1 minute chart. What is your stop loss? 118.38, highest at 118.42. Wow, 5 pips. Let's say I gave 10 pips for this trade. So for 10 pips, if you only want to lose $100, how many lots you trade? 10 pips, $100. We know that for standard lots, per pip is $10. So 10 times 10 is 100. Yeah, bingo. I can trade 1 lot in this 1 minute chart, okay? And my risk is only $100, right? And look at my returns. Okay, you earn 30 pips. You earn $200. Right, you earn $200. So $100 for $200, yeah, good trade. You can close it all, right? But if you never understand the logic that how to trade a pullback, why we don't want to chase price? If you sell here, you see, if you sell here, you may be scared by this pullback. You may cut loss, right? And okay, once you cut loss, boom, it comes down again. You think, oh no, why should I close the position? And then you short again, you just chase the price again, chase here. And then the market just pulls back again. And then you are lost, you are losing money right again, right? And you feel so upset. How come every time when I trade, the market is against me, right? And then just after you cut loss, boom, it comes down again. It's like torturing yourself. Right? If you never wait patiently about the pullback, if your entry level is not so good. All right. Oh, now it's 5:53. Okay, 5 p.m. already. Is it? Is your time correct? It's correct. Okay. Yeah. I think because due to the time limit. Okay. Let's just mention the last. Let's talk about the oil. Okay. This is the last thing we want to focus on. Okay. Okay, guys, the oil, you see, this is a gap, okay? And this gap, because it is in the same direction, the previous trend, so this is a novice gap, because people are chasing the price. And what happened to these people who are chasing the price here? Huge loss, right? Huge loss. And right now, you see, did oil close the gap? Yes, they close. But normally, if they close the gap, you should close the gap. However, because this is a novice gap, after close begins to fall because there's no institutional buyers in this here. Institutional may want to buy. That is novice gap. Or novice may want to buy. Okay? So it comes down here, there's some institutional right here. And now the price is still below the gap. So what does this tells us? It just tells us that the gap doesn't make sense. The OPEC meeting makes some agreement that non-OPEC is going to cut the oil the output, right? It just makes this a false breakout. And we eliminate all the candles together, that is a huge pain. And pain tells you that sellers. So oil, I'm still bearish. As long as it can below 51.44. It just tells you that the oil cannot go through this level. And it may still go down. Where will it go to? 49.60 will be the first level. And second level will be 46. This here. So we can still expect the oil to go down. Right? Pay attention to this gap. Okay. In the trading markets, pay attention to those people who made mistakes. Okay, because whenever there's a mistake, the people need to correct the mistake. Either people are buying, are chasing the price, they are buyers, right? Now they become sellers because if they didn't sell, they are losing more money. So pay attention to these mistakes. Yes. Actually, yesterday this pullback, this is a good short opportunity here. You know that this is a, you see, you just mark here. This is a gap, right? Price goes down, breaks a low. Breaks low means that the bearish trend continues. And pulls back, however, it makes a ping at here. Look at this ping bar. Tells you, yeah, there are sellers at, now the sellers are at 51.40 level, right? So you can sell at the ping or you sell at the pullback, and now you are earning profits. Okay, and may still continue to go down. Okay, all right. So it's very quick from 3 p.m. to 6 p.m. All right, I think natural gas. All right. Okay, natural gas. You mean the gap around which time frame? 4 hour. I think that gap is due to the rollover of the contract, right? I don't see a gap here. 1 hour. Okay, never mind. But natural gas, definitely, the uptrend is finished, right? And we just have very nice, you know, we have a low, 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 and lower lows. How about the highs? So it's already lower highs and lower lows. So this one, what we want to do is we want to catch a potential short, right? To catch the further decline. Okay. So whenever there is a pullback, you see here is a very, very good structure. When it breaks down this level, immediately we have 1, 2, 3. 3 candles retesting the structure and cannot break above. And that's why you're short. You short there and you now earn money, right? And it's good thing is it continues to make lower lows, right? And right now, even it is bouncing, but we know that now this part, this level is very hard for it to break. Yeah, it is correct. But for this one, okay, if you already see 1 pin bar, 2 pin bar, you already know the sellers are there. So you can just set a stop loss above the pin. Here we do. Okay, because if the later on price goes higher and goes higher above this pin, this doesn't make sense. This structure is designed. Right? So you can use this version of 7 minutes for references to set a stop loss. Alternatively, you can go to 5-minute charts. Look at this 5-minute charts. That will be easier for you. Be here. Okay. Do you see this candle? Right? So this candle have some buyers and it breaks out, right? And you know that in 1 hour chart, it actually breaks down more. It breaks this level, right? So when the price comes back, your stop loss should be below. Okay, tell me what is the most powerful bearish candle in this trend, in this bearish trend? Should be this one, right? this is a dominating bar, dominating candle, because without this candle, you may not even also below this line. This never happens. It makes the whole very bad news, right? And we short, we just want to put your stop loss to above this. You can just above these candles high. That we do, right? And now you have more earnings, right? Okay, let's finish today. And okay, I'm very happy to announce that because this place is IG Markets theater room, and thanks for IG for letting us to have this kind of gallery. Okay, so I want to invite the IG's RM to just to brief you guys some special features about IG. One very good thing about IG is now they have the guaranteed stop loss. So a guaranteed stop loss will help you to no need to worry about the black swans. Okay, you are guaranteed to get out the trade at the price that you want. All right. Okay. Hey guys, I'm going to end the seminar now, and the recording I'm trying to finish uploading YouTube. All right. So I will stop the internet session here. Okay. Thanks for coming. All right. Okay, Isaac. Thanks. Bye-bye. Just ending.